All right, let's jump into it a little bit later this morning. Where we at? Almost 11 o'clock, so probably going to see a little bit of volume pop in a few minutes. Look, start off with DXY because we had a bit of news out overnight. We had ADP, which is sort of like the private sector of sort of NFP kind of thing. And we see actually, let's flip across. I'll show you the figures. I can zoom in on these ones. I realized as well. So. Here we go for last night. Where we are. Oh, no, I've got to refresh this one. So Thursday night, this is ADP here. As you can see, we had 111,000 revised down from 122 previously. Again, expectation was a little bit of a tick up. This would have strengthened the US dollar a little bit, and it came in lower. So basically, unpack it again. Economy's not doing great. Companies aren't doing great. They're not hiring a lot at the moment. And this is the big sort of talking point with the Fed at the moment. If they see that kind of stuff sliding, they're more inclined to sort of act in a more drastic kind of way, I guess is the way you'd put it. They basically it leans more into the thought or the narrative of a 50 basis point cut opposed to a 25 basis point cut. We had then unemployment claims out 15 minutes later. It was actually a bit of quick succession, like bang, bang, bang of the news, and we saw unemployment claims down. We've got ISM came out as well. Both of these sort of ticked up marginally. So the final services PMI and then ISM services. As you can see, these are the ones where you've got benchmarks of 50, so expansions above 50, contraction below 50, and that, and further away from the 50 mark is what is going to be their sort of as to sort of how strong their expansion or contraction is. So these numbers here seemingly are quite, this is quite strong, and it was a slight tick up from previous on the ISM, and also still above expectations as well. They were throwing a little bit of a slowdown there. So these things sort of combined, if we sort of jump back onto DXY here, we can see that sort of like, it was coming in as this data was coming out. This is the moment here. And it's funny because I was talking to a guy I sort of trade with as well, a mate, and oh, let's pull that back there. Oh, there we go. Charts are all over the place. I was saying that look, I was looking for a reversal or a little bit of a sort of pushback. Whether it's a reversal to sort of go back up, I wasn't saying that, but you can see this is a known area where the market has sort of reacted previously. Here, obviously, sort of a couple of times coming through here, and as it came into it last night, came down here and it pushed straight back up. It stuffed around a little bit, and then as you had the ISM numbers coming out, which I just showed a moment ago, were a little bit stronger, that really put a little bit of buying into the US dollar there. Because the thing is, at the moment, the reason that it's sort of coming back here is, like, as I said, it's a to and fro as to sort of are they doing 25 basis point, 50 basis point. We know there's cutting, so that puts pressure on it regardless. Um, as to how deep and hard it comes down here, well, now the question is not sort of like, are they going to hold or 25 basis point? It's whether it's a 25 basis point or 50 basis point. So 50 basis point is really got to put pressure on the dollar. As we know, you cut, it's going to weaken the dollar, or it's going to weaken any currency in that if their central bank cuts. So obviously, the more they cut by, the more pressures it's going to put on it. So now, when you get sort of strong-ish data, look, cuts are still coming. It's still going to be under pressure, but they're going to rebalance it a little bit, and you're going to see a little bit more of a sort of not such a drastic push to the downside. So that's the important thing to sort of understand, that sort of like, it's not necessarily what is actually happening, it's just how the market is perceiving what is potentially going to happen, speculating. And that's what it is. And this is what price action, price flow is about. Like, you can sort of pick and say, hey, look, this is going to happen eventually. And yes, look, eventually it will happen. But the thing is, unless you're a sort of long-term investor, that's kind of irrelevant. You got to trade what's here and what's now, and also whether you believe the news or not. Like, this is what the market is moving off. It's moving off what they sort of talk about. Like, so for instance, with Aussie yesterday, we had Bullet come out and very bullish. You know what I mean? Economy's stuffed, but the rhetoric and the talk that they're saying at the moment is hawkish. That is going to be re represented in the currency. You know what I mean? Like it's whether the economy's stuffed and all these people want to do, um, cuts and all this kind of stuff. It doesn't matter. Like at the moment, till that actually sort of becomes part of the talk, um, they're not going to do it. Like that's the thing. Inflation and recession are the two balancing acts, and they've outwardly stated, look, you know what? If we if we kick down the rates now, inflation's still way above target. Oh, it's almost two times target because 2% is really the target. It's at 3.5. So it's definitely not the time that they're going to be cutting, in my opinion. Anyway, so back to DXY. So as you can see, look, it really gave it an effort up to the top side here. But again, remember that cuts are coming, and this means that it's still going to remain under pressure. And as you can see, the market didn't even really give it much of a chance. It got up here. It actually looked halfway decent for a moment, and then obviously bang, sort of fell on its head afterwards there. So just having a look to see if there's any other news that sort of came through. So was it? Whoop! What is going on there? What is this? All right, and we're back. I'm not quite sure what was happening just there. Anyway, so point being, I was saying, look, it's cuts are coming, so it's still going to be under pressure. They got up there for a moment, and then obviously, yeah, sort of knocked on the head. So we're back into this zone here where we saw the reaction from last night. It is a somewhat, I'm not a super fan of this, but I guess it is shoring up a little bit. It does match up with what could potentially be a bit of a channel down this area here. And if you watched the video yesterday, I was sort of saying that I think this is going to continue down a little bit. Though in saying that, these things aren't going to I don't think we're going to get major breaks down to, anywhere down here till you have some news catalyst for it all. We've got NFP tonight. NFP, if that comes in weak, then this is a very good plausible reason for US dollar to go bang to drop down here, test these lows, and not even test the lows, but it could potentially go through. You just don't know with these things. Where's my little RSI gone? So as you can see, it's back into this sort of support area, potentially a bit of this sort of lower sort of falling support as well. Let's drag one of these across. This is probably more what you're looking to break at the moment. This was a little bit of a channel. It looked like we got up there for a moment, but obviously hasn't respected this line, so we're going to delete him. Beautiful. So I think this is where you're sort of at the moment. I think, look, if you're looking for sort of US dollar strength in the short term, again, you want to get back above these kind of levels. There's a lot of headwind here. You got to get above, well, you got to get above this. 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 That's a lot of little potential sell down resistance points for any sort of US dollar buying. So till you have sort of like, again, look, NFP, if it comes in strong, remember, cuts are coming, that's fine. But if it comes in strong, well, that means that people are going, okay, hold on, wait, 25 basis point is probably more likely. You're going to see that happen. It's going to move up, regardless of the fact that the cuts are coming, because it's so under pressure here with weak economic data and also the idea that cuts are coming. Well, that's a double whammy, which is knocking it down here. So anything other than shocking numbers will actually see a little bit of appreciation in the US dollar in the short term. So that's where you're kind of looking for here. So I think, look, realistically, I would say that I could probably see it sort of coming back up here to test at least this 10125 level. We're at 10102 at the moment. Based basically on the fact that obviously we had some of that data last night. It pushed back up here. Yes, they smashed back down into it. But I think now you're coming into Asia, you're going to see, the other markets start to react a little bit to this. And I think we may sort of see, at least through Asia session, a little bit of a push up here. As to whether it sort of comes back down here, that you just got to wait and see what happens as it comes into this area. But I'm sort of looking at a little bit of sort of US dollar buying probably through Asia. And flip across is gold. Gold, this actually traded very well here. Look, I was obviously looking for the longs at this point down here. I wanted to try and get the 80s to get back up here, and I didn't get a chance, and it just took off. So I sort of flipped the idea, and I started shorting around 20 because we know that the 20s have been a very strong sell area. Like, yeah, I've shorted the 20s through this period, a number of times. I can't remember if I've caught every one of these or if three of them or whatever. But the point is, it had this little downtrend channel. This is our consolidation box now. Zoom out a bit. If we go like this, you've got your large range. It's broken out. It's attempted to go higher, tempted to go higher, tempted to go higher. 1, 2, 3, 4, 5 attempts, and obviously bang back down to the range. So again, till we have a catalyst, I don't think we're going to see a breakout of this here. And you know, NFP may or may not be the catalyst, but certainly if we get strong numbers with NFP, we're not going to see gold move out to the top side. And an idea of this is the fact of how the price action happened last night. Have a look at what happened here. So we got the breakout. It was a big, strong move through the top here. As that data came out, it just got pummeled. Well, pummeled, yeah. Back into an area. If you watched the video yesterday, I said 2507. That's the area it's going to come back and test. Yes, it overshot it a little bit here, but you know it did. It came back here, held this little midway, and used that as a launch pad and shot back up. So you know, but the idea is that it had strong, well, stronger US data, and gold did not like it. Gold's running inverse to DXY at this moment. Look, 90% of the time it does, but there are points where it doesn't. This is on the 1 hour. Let's have a look on the 4 hour. 4 hours overbought, lots of wicks. 1 hour, this, you know, again, look, you could just fly up the other side, but as it stands at the moment, look, that is not the buying pressure that you want. Like, I mean, it's not a negative divergence. Negative divergence would have popped in a new high. But certainly as it's coming back up here at the moment, you can see this price rolling over and the buying pressure here. Look, yes, you've got the wicks up the top over here, but look at the buying pressure that got it up to this level last time. Look at where the buying pressure is now. You know, you can't even get above 50 and it's rolling from that high. So again, I think sort of potentially with a little bit of sort of US dollar buying through this session, we see gold come down underneath a little bit of pressure. As to whether it sort of goes past this point down here or just makes itself a little sort of Asia session range, you know, $10 range or so, yeah, you know, that remains to be sort of seen. But I would say that sort of we're not going to certainly be seeing any breakouts through the session. That's a guarantee. And if NFP comes in strong, again, US dollar strength, we're going to see gold come back down and retest these lows over here. That's my sort of feeling. Particularly if you get down and then sort of close underneath this 2506 area, if we see a close down here, well, that's going to be it. And you're going to see something to this sort of effect of coming down, maybe a retest, and then down this side here. That's the kind of play that you'd be looking for. But as I said, sort of through Asia, there's no real sort of catalysts at the moment. So if we see US dollar buying, I could see it coming back to 2506 and probably just playing this range here. This would work out with the same as coming down to this 2506 area. Would work out with the same as I said, sort of gold moving up to around that 10125 area. I think those two would sort of tend to sort of thing. You get gold coming into its little midway support. Sorry, I sound like I've got a stutter. Coming into its midway support, and you've got DXY coming into its resistance. And you see the flows go back and forth from the two at that point. So, yeah, I'm not looking at it, but I think short term through this session, I think we see a little bit of downside with gold here. Aussie is somewhat holding up, but it's not really firing there. And look, it's coming up to test top side of this sort of falling channel, overshot it down here. But it's not finding what it needs to really fire back up at the moment. And this is, I think, a little bit sort of weighed on, as I said the other day, that, you know, it's against the US dollar. US dollar's, I mean, coming right down to its lows. Aussie is not coming right up to its highs. Aussie should be up over here at the moment, but you've got the added fact of the risk on the market and the equity sort of selling off. So 2 seconds. All right, I'm back. Yeah, so you've got the sort of added fact of sort of risk across the market, and this is what I was sort of saying as well. I think the cuts coming for the US is going to be obviously sort of all your crosses like your Aussie dollar, your euros, whatever, the pound, whatever you're trading. Um, they're obviously going to appreciate somewhat as the US dollar declines. Like that's just a given. Um, Aussie's a little bit sort of different to the others because it's a bit more of a sort of a risk asset with it all. Like it can see the US dollar sell off, and this is the thing because it's not part of that DXY as well, remember, that you can see DXY sort of selling off. So again, basically, in short, that is US dollar, being sold off against all the other majors or the majority of the other majors, but Aussie can still be lagging. And that's because sort of Aussie has that risk side to it all. And if you look at sort of like, if I flick across quickly, you're seeing this is the NASDAQ. That's certainly under pressure. It had a little range and it's breaking lower. S&P, I mean, this is kind of what I was looking for here. A little bit of a break. We're seeing a potential, a little bit of maybe not so much of this bear flag now because it's sort of stuffed around with this area, but you could say this is a break, a retest, and it's coming down here, putting in a lower low to sort of come down to this level over here around that sort of 53.92 area. So, if these equity markets are sort of selling off because, they think, okay, well, as I said, this is the hard landing, soft landing thing that if they cut, you're going to see, excuse me, if they cut, you're going to see different reactions based on how much they cut by. Because how much they cut by, if you unpack that, well, a 50 basis point cut is because they're scared. A 25 basis point cut is, they're cautious. And I think there's a difference in that because equity markets are happy with cautious because you know what? They're cautious. There's going to be more money into the markets and into the flows. Um, if they're scared, well, you're going to see that scared sort of feeling carry through to equity markets. And if equity markets sell off, that's going to affect risk, and that in turn is going to weigh on Aussie. So look, Aussie's actually sort of, all things considered, it's still holding up very strong. I mean, remember, of this whole recovery move up here, we're only at the 23%. So even if it does decide to sort of come down a little bit further, and we find that, this is a bit of a sort of steep thing, so I'm just going to have a look at it. I don't know. I do these charts as I'm sort of talking, so, maybe this sort of could potentially see some move along these lines here. It's not to sort of say that this will come, but certainly, there's a measured move that puts it back down here, and we know 66.40, it's only a 38% retracement. It's that breakout level that we sort of saw on the way up, which, as you can see here, just ran through, never retested. There's a plausible sort of argument to sort of say that if we do see some sort of, US dollar squeeze rally, that Aussie may sort of come back up towards, may come back down over these levels here. And again, look, if it does, it doesn't mean that it's over. It's still at the 38%, which is a bullish retracement level in the grand scheme of things. Because remember, this is the move, comes back here a little bit, reloads, and then shoots back up. You drag in a bunch of shorts, you stop out a bunch of longs, and then sort of when everybody's sort of gone, oh no, we can't do anything, people realize, hold on, wait, no, the cuts are coming, and hold on, wait, we can actually put some money into the markets and or whatever the case may be at that time, and you may see some sort of reason for it to then sort of like base around this level and sort of move back up to the highs. I'm still of the belief that we are going to see a couple of things. One, I don't think RBA is going to cut this year. I don't think, unless they get CPI double prints close to 3%. Look, I think the realization now is that they're sort of saying, look, 2% is our target. I mean, well, that's always been the kind of target, but I think sort of they've got more realistic expectation now. And the wording with these things generally seems to be targets 2 to 3%. And they don't have to wait for it to hit the exact target before they cut. But certainly at 3.5%, it's too high. So you need the data to back it up to sort of show, okay, you know what, inflation isn't such a prevalent issue. We actually may be able to sort of steer our attention to the fact that the economy is failing. But you know, even based off sort of what Bullock said yesterday, she said, look, you know, you've got two choices. You've got recession or inflation. You know, and the way she was saying it is sort of like, you know, you're going to have one or the other, and we're dealing with this now, so we're not going to just change course. She said even yesterday, look, you know, some people are going to have to understand that they may have to sell their houses, and look, unfortunately, that's the name of the game. You know what I mean? You borrow ridiculous amounts of money which you can't afford to pay back with no forethought. Well, you know, if you over leverage yourself, that's unfortunately part of the game. And I know it's hard to say, but like the thing is, that's reality. Otherwise, everybody would just borrow as much as they want all the time, and the housing market would be even worse. I mean, the housing market across the world seems pretty bad, but certainly, you know what I mean, Melbourne, Sydney, these kind of things, even Queensland now, you know, it's just out of control. You know what I mean? There's just no chance for people to really sort of get into the market unless you want to sort of live out in the middle of nowhere or live in a shoebox. They're your options. Do that and do that for, you know, some people, do that for 10 years and then maybe think about living somewhere halfway decent or desirable. But you know, anyway, that's getting ahead of ourselves in that with it all. But you can see now Aussie's actually sort of pushing down a little bit. If we see any sort of continued drive on US dollar through Asia, this is going to put a little bit of pressure. I think this is a fairly decent line that we can sort of look at for a potential sort of break. We've got sort of three touches of it coming through here, and as I said, sort of if we get 20, 20 seems to have been a very strong sort of support area. But yesterday's low, so if we get onto the daily here, yesterday's low will be, I think, the one that gets us going. So yeah, if we get, you got the body fills, look, underneath 66, 67.10 is where I would put that alert, just here. Maybe it's IES, whatever. So yeah, we also see here, look, the RSI's still got a little bit of room to move. Over these little arrows along here, so you can see it as it plays out. But look, RSI's still got a little bit of room to move. So there is a thought that it could minimum sort of come back down to the 67.10 here. See what happens there. If you go down through that, well, then you're probably going to look at this next leg down, as I've sort of drawn out here. Bang, bang, and then next leg down. If it sort of finds support at this sort of 14 or 10 level through here, then we could be sort of seeing a little bit of a sort of range form at the bottom here, and then that could then provide us with a breakout level above and the breakout level below. So I flip the daily to the top side here, go above sort of, you know, 45, well, on with the show. But if we go down below sort of like 67.10, then I'd say I'd be looking for those 60 sub 67 levels. But as I said, I don't think we're going to be getting anything too major just before NFP and that. Before these sort of major news events, it's generally pretty quiet. All right, flip across, and we got gold, which we've gone through. We got silver. Silver, look, there's a guy on X, a Silver Surfer or something like this. He's very good, very big with the technicals, and obviously, given the name, he trades silver. Um, he does Elliott wave sort of stuff, and he put a chart up the other day and came up and had some third wave or something up over here. I don't really follow Elliott wave that much. I understand the concepts of it, I just don't use it. But one thing I did note was that it came out very much at the same level over here for a top end to sort of come back down over here, and that's what I was saying to him. I'm like, look at this measured move. If you put it 4 hours, you see it a bit better. The measured move of this channel comes right out here, which obviously clipped the top side over here. We've seen this pullback come down here. The double touch, or yeah, I don't know, probably 5 touches, excuse me, but the double move down here to sort of try and get through 61%. This is a good example of sort of why I say these 3 legs are important, because if you look at this move down, you've got, say, you move down, that's your support, moves up, resistance, you're going to have this leg is going to come test this one here. Tried to hold it, selling pressure too much, it breaks through, on with the next leg. You go down, you find support, come up, you find resistance, you come down. You're going to test the lows over here. You tested the lows here, but you saw this time they brought it back up. So this was the indicator here where we had this sort of like bit of a sort of like a bullish reaction on the second thing. A failure to continue is almost as good as a straight continuation. It tells you the same thing. You put your sort of your little alerts just above the highs because this makes that little range, and this is kind of what I was talking about a second ago with Aussie. Above that little part of the range there, break that, and away you go. And look at that move. And that's been a very good move for silver coming back up at the top over here. So look, I think that these things may sort of need a little bit of time to chill. Not expecting a great deal through this session and that. Though, as I said, I do think we have higher targets to come with silver. But in saying that, it doesn't mean that we can't sort of, do a little bit of stuffing around first. This is 4 hour. We could just see back here, back here, back here, and then something like this. This is obviously just an example. But it doesn't mean that it's sort of dead. It just means that we found support at the 61. Break the 61, well, that's it. You got your lower high, official lower high there. But this is your big rally. This one doesn't count. I mean, it does count as a lower high, yes, but that's played out now. So now this is your high, and this is your high because this high broke this lower time frame high to get up over here. So this is your official second high now. If you come down here and then go along sideways, you're still in the game. You break the lows over here. Well, that's it. You're looking much lower. I don't see this happening for silver, personally. All right, copper. Copper's buy zone. Bang. That's why I love charts, man, because you can see them just play out perfectly. This is the area that we said we're going to have trouble. We marked it out. It happened. Came down here. We had the buy zone. Back test to the top side of this big sort of falling resistance coming through here. It's stuffed around in here a number of times. That last one, boom, launched and out the top side here. It found resistance where it kind of should have. Because as you can see, there was selling here, there was selling here. They broke through. There was buying here, buying here, buying here, buying here. What's going to happen the first time it comes into it? Selling. Like, it's not sort of like, oh, why did it stop there? Well, this is the thing. That's how that chart sort of works. And so it'll sort of take a little bit of a clip on the nose, may sort of come back down lower, but, it may not even come through next time it comes through here. But eventually, if it does sort of keep rallying towards it, there's a good chance that it does. It's got a little bit, that's a big decisive breakout to the top side. It sort of chills for a little bit. But yeah, this is your break area. You want to get above here because realistically, you get above here, you're through this falling resistance, you're through this horizontal, so that's two segments of the market, and you're going back up to over here. And again, same sort of thing. This thing's not going to break necessarily first time it hits. As you can see, it got smacked, came back down, regroups, comes up again. It may not break necessarily the second time either, but if each time it taps on it, 1 tap, 2 tap, 3 tap, 4 tap, eventually, bang, it breaks down. There's only so much that they have to throw at it at these certain levels. So you just got to you got to pick the levels, see how many times it taps it, see how it reacts as it comes into these periods, and then sort of, trade those reactions. And it's the same on every time frame. Because if you think about this is a larger time frame. Look at this. This is on your daily. It hit where it's supposed to on the daily, and it pulled back. You know what I mean? So that's the daily. On the 4 hour, it hit where it's supposed to. It pulls back, and then goes through. You got to break the lower time frames before you can get to the higher time frames. Obviously, though. So, yeah, we'll see how we go with this. But again, I wouldn't be surprised to get maybe a little bit of a back test. This is obviously a little bit of a zone through here, which we've noticed. This is sort of selling. It was buying. It was selling. It was selling. I wouldn't be surprised if we get a little bit of a pullback here, come down into this, reload, and then have another top shot just up at the top over here. Again, if we see a little bit of US dollar buying through the session, which is what I'm sort of thinking we are going to see, that's going to put a bit of pressure on metals across the board. We're going to see gold potentially pull back a little bit. We're seeing gold and silver actually both pull down now. You can see copper in front of you at the moment. That's pulling down as well. So these are the things to keep an eye on. And finally finish off with China. As it sort of thought, this is the plan of attack. Bang, up into the zone, rejects, and it has come down here. So what we can say now is this is where the buyers are. So like I said, with all these things, you go up, you find resistance, you come back down. This leg that we're in now is coming to test this low down here. This is the leg where we find, do we get a double bottom? Do we get a lower low? Maybe a higher low, but it's pretty much a double bottom in my opinion. If it stopped here, maybe you get a higher low. But yeah, no, for me, this is at best, it's just going to range through here. But if US dollar across the board sells, say we get that weak NFP, we're going to see this crunch down over here. So that's one to sort of watch out with that, and obviously how that relates to Aussie and the other markets as well. All right, so quick look at the news. Through today, we don't have a lot going on in Asia. As you can see, pretty quiet, pretty quiet, pretty quiet. And the big thing tonight is NFP. So, yeah, I mean, I was going to say, again, I sound like a stutter at the moment. 114 was previous. 164, that's a fairly big tick up, percentage-wise. You're looking at 40% tick up on that. But look at AFD, where are we at last night? 111, actually, what was it? It was revised from 122. That was 122, supposed to come in at 144, came in at 99. So, they're not really on the money at the moment. But in saying that, ADP isn't necessarily a precursor for what's going to be happening with your NFP at the end of the week. But still remains the same. You get a high number, you're going to see US dollar strengthen up, and it's going to strengthen up only so much. It's not going to be the major breakout because cuts are coming. That will remain under pressure. It means that parts of the market are going to use this to sell into. But the strength that will come with the US dollar will be on the basis that people are positioning for a 50 basis point cut, but then the idea that only 25 base point cut may be coming because the economic data isn't as bad as everybody thinks it's going to be, then you're going to see some of those positions get out. So they're heavily weighted on the idea of a 50 basis point. You get good data, well, maybe the rhetoric, the sort of thought, the narrative changes. They only need 25 base point. People go, okay, let's take a little bit of pressure off it. Let's reduce our positions a little bit. And you're going to see US dollar get a bit of a push back up from that level. All right, that's it from me.